from ancient bantering to modern digital transactions. The fascinating history of banking systems across the globe. Have you ever wondered how the present-day banking networks changed over time? Banking has always been essential to the growth of economies and communities, from early bartering systems to contemporary digital transactions. Join us on a journey through time as we explore the fascinating history of banking systems across the globe. Banking has a long and fascinating history that stretches back thousands of years. One of the earliest forms of banking was barter, which involved the exchange of products and services without the use of money. Ancient societies frequently used barter as a means of facilitating trade between people and communities. Over time, barter evolved into commodity money, which involved using pricey commodities like gold, silver, and other precious metals as a medium of trade. The ability to exchange products and services for a consistent unit of value made it possible for trade transactions to become more complex. Paper money and coinage ultimately replaced commodity money because they were more portable and practical for use in large-scale transactions. Banks were essential in the evolution of paper money because they issued banknotes that were backed by precious metals like gold and other valuables. People initially looked for banks to store their valuables because they felt that their ancient houses were unsafe places to do so. Since people won't steal from temples, they decided to store their goods there. At some point, this ideology began to change, and banking operations began. The earliest banking systems can be found in ancient societies like Rome, Egypt, China, and Greece. Clay tablets from Mesopotamia that date to 2000 BCE contain records of early financial activities, including loans and deposits. The Roman Empire had a sophisticated banking structure with money lenders, public banks, and private banks. Wealthy people controlled the private banks, while the government managed the public ones. Money lenders, who offered credit to both people and companies, were frequently linked to private banks. In order to aid trade, the Roman banking system also utilized checks and bills of exchange. Similar to this, temples were used as financial hubs in ancient Egypt, where priests worked as bankers and enabled deposits and loans. In ancient Greece, money lenders played a key role in the economy, providing loans to individuals and businesses. They also assisted clients in managing their finances and assets as financial advisors. The idea of a credit system, whereby traders and merchants could acquire credit to finance their business activities, was also created by the Greeks. In China, banking systems emerged during the Tang Dynasty with the development of paper money and the use of government-run banks. By offering loans and deposits, they also made it easier to exchange products and services. These early banking systems served as the forerunners to modern banking, and the financial systems we use today still reflect their influence. As the days ran, the Medici family played a significant role in creating a banking network that enabled trade across Europe, and Italian city-states like Florence, Venice, and Genoa were hubs of international trade and banking. The family's banking network had location in many European towns and pioneered cutting-edge accounting practices like double-entry bookkeeping and letters of credit. The emergence of banking in medieval Europe had a significant effect on the continent's economy by facilitating the creation of new financial instruments and making it simpler for merchants to transact business across borders. However, the expansion of banking also brought about new difficulties. Governments started to more closely control the banking sector as fraud and bankruptcy became more prevalent. The expansion of commerce and trade contributed to the creation of contemporary banking systems, which were essential in providing funding for economic growth. The Industrial Revolution, which resulted in major economic growth and development, was made possible by the establishment of banks like the Bank of Amsterdam, the Bank of Sweden, and the Bank of England. Paper currency and bills of exchange were widely used during this time. To help with trade and finance, banks were founded in significant business hubs. offering services like currency exchange, deposit taking, and lending. Banks supplied the funding required to invest in emerging technologies in sectors like steam power and textile manufacturing. As a result, there was substantial economic expansion and growth, as well as social and cultural changes that fundamentally altered society. The emergence of new technologies was also vital to the growth of the banking sector. Consumers were able to conduct transactions without using cash due to the development of credit cards in the 1950s and 1960s, and the introduction of ATMs in the 1970s gave banking clients more accessibility and convenience. However, due to risky lending practices or economic downturns, many banks collapsed in these early banking systems, which were frequently unstable. Modern banking laws were not implemented until the 19th century in an effort to prevent such disasters and stabilize the world's financial system. Then the banking sector underwent a significant transformation during the 20th century. Large national and international banks that offered a variety of services to clients all over the world emerged as a result of the expansion of international commerce and the rise of multinational corporations. By utilizing their size and scope, these banks were able to offer services like underwriting and mergers and acquisitions, which aided in the expansion of the world economy. However, the 20th century was also marked by significant challenges for the banking industry. The 2008 global financial crisis was a significant setback for the sector, resulting in widespread failures and compelling governments all over the world to take extraordinary steps to avert the financial system's collapse. The banking sector has recently placed a greater emphasis on the value of regulation and risk management as a result of the crisis. Governance and regulatory organizations all over the world have responded to these issues by enacting a number of new laws designed to strengthen the stability and resiliency of the financial system. Stricter capital requirements, improved risk management procedures, and greater oversight of bank operations are some of these regulations. But with the emergence of digital banking systems, the banking sector has undergone a significant transformation in the 21st century. As more people use digital platforms to manage their money and complete transactions, online banking and mobile payments have grown in popularity. By providing a decentralized alternative to established financial systems, cryptocurrencies like Bitcoin and Ethereum have also disrupted conventional banking models. Customers who use internet banking have 24/7 access to their accounts, while those who use mobile payments can conduct quick and secure transactions using a smartphone. Additionally, those who live in rural regions can now use their smartphones to access banking services. Millions of unbanked individuals could be brought into the formal financial system as a result, giving them access to financial services and promoting economic growth. However, digital banking also poses new challenges for the banking industry. As hackers and cyber criminals target digital platforms to steal confidential information or carry out fraudulent activities, cybersecurity risks and data privacy concerns have grown in importance. In order to address these issues, banks and regulatory organizations around the globe are stepping up their cybersecurity efforts and increasing their oversight of digital platforms. The development of international banking standards like Basel III and the creation of central banks have both made significant contributions to the advancement of prudential oversight and risk management in the banking sector. At the same time, microfinance and Islamic banking have contributed to the evolution of banking systems across the globe by offering innovative approaches to banking and financial inclusion. They have provided new opportunities for individuals and small businesses who were previously excluded from traditional banking services, while also promoting social responsibility and ethical investments. As the banking industry continues to evolve, It will be interesting to see how microfinance and Islamic banking continue to impact the sector and drive further innovation. The future of banking will be characterized by ongoing technological advances, changing customer preferences, and evolving regulatory requirements. Innovation will continue to be fueled by digital change, with blockchain, AI, and machine learning all playing growing roles. Fintechs and other non-bank institutions will challenge traditional banks, driving competition and innovation. Regulations will keep changing, with an emphasis on fostering stability and safeguarding customers. ESG factors will become more crucial as banks handle ESG opportunities and risks to satisfy changing customer demands and regulatory requirements. In this rapidly changing environment, banks will need to innovate and adapt if they want to stay competitive and satisfy the changing requirements of their customers. In conclusion, global banking systems have a rich and complicated past that is full of intriguing tales and crucial turning points that have influenced the development of human history. The banking sector has been essential in facilitating economic growth, trade, and investment. Wars, economic crises, and technical advancements are just a few of the difficulties and barriers that banks have had to overcome throughout history. Nevertheless, despite these difficulties, banks have persisted in developing and adapting, providing cutting-edge goods and services that have revolutionized the way we conduct business and handle our finances. As we turn to the future, it is evident that the banking sector will keep playing a crucial role in influencing the world economy and fostering financial inclusion and stability. I hope this video was informative and interesting for you, and don't forget to share it with your friends and family. Thank you for watching, and we will meet you with another entertaining video soon. Until then, like, comment, share, subscribe, and stay tuned with our channel.